MGM.
Wait, Bungie, is that you or is that Matt?
It's Matt.
Wait,
Going to
what?
mainnet. We launched mainnet.
Dude, I don't know if I'm tripping out or you sound exactly like Matt.
Dude, this is Matt, bro. No, I don't have music today, but someday I'll grow up and be just like Matt. How we
Uh,
doing?
I missed the music in the introductions. Bungie, you got some static. I'm not sure if you can go to a better place or get a better mic on the way, but otherwise, it's all good. Look, it's Bitcoin builders. Builder, apparently. My bad. Let me fix that. Yeah, it's been a long year. Clearly, we hadn't had the runes run up that everyone was expecting. I think over the last 2 or 3 months, I think the ecosystem and the market is obviously shaken up. All the attention from the degens are going to infrastructure for AI tooling, AI DAOs, and all that sort of stuff, and it's really pulled away the attention from the Bitcoin ecosystem outside of like the quantum cats and I guess a few select others which had kind of spikes of value accruing to them for I would say largely like speculative reasons. We haven't necessarily had like massive price swings upwards. In fact, Node Monk's at 0.114. Geez, Puppet's at 126. It's we're certainly coming into this like survival mode. If you're still here, you're holding on to your bags. You're a long-term believer. You're a believer in that Bitcoin is forever and things are going to get better as far as like the infrastructure and user experience goes. We haven't had like too many changes over the last 2 months, Bunzi, but I don't know if you've been following along, but there's just been a substantially greater amount of volume flowing through the X versus swap tooling. I actually think it's super interesting that people are genuinely starting to adapt this I can't wait any longer type of attitude towards infrastructure that Saturn and Arch are building. I think those things can't come soon enough. But in the meantime, it opens up this door where people are actually starting to become more willing to join and use custodial solutions. I think is a long story short. Obviously, got my fingers crossed that we're not going to see any sort of exploit or issue with the underlying code and some of these teams, of course. I always just get a little bit nervous in supporting centralized solution because if we all start to become reliant on it as an attack vector, one day something happens and all trust, faith is really diminished. And obviously, we don't necessarily want that to happen. I don't think I do. But in the meantime, it seems like it's really been the only way to trade in a frictionless manner. I've been using DotSwap and RuneSex more and more, quite frankly, just to one, test out things from an attack vector perspective. So canceling my UTXOs and rebuying, reselling, and seeing what I can break manually to see if I can get behind actually providing liquidity on these. But obviously, they've been around for DotSwap has been around for a little bit, so nothing has happened so far. So it leads me to believe that it's in a decent position. I would say. Bunzi, have you used these swap tools just yet?
Yeah, I messed around with them when they first came out, but I'm with you. I think it's just in a tough spot because Bitcoin maxis are very protective of their sats, but I do think that
Are we Bitcoin maxis or are we Bitcoin degens? Because I think those are two different
that's
things.
super fair. That's like the realest shit I've heard, actually. Because, yeah, I think it's like we like to say these things, but at the end of the day, we all have Solana wallets and like doing absolute degen things as well. So that's a fair point. But I do agree, like, it's hard to get behind one of these things because once an exploit happens, you're along for the downfall with that if like you're, really rallying around it. And it's not a matter of if, it's when. If the like bounty quote unquote becomes large enough and there's enough liquidity to really start to shake out some of these vulnerabilities and the black hats put their hats on. But it's super difficult to speculate and play that game. But Express uses dot swap routing, correct? From my knowledge, that's
Yeah, so if you use it from the app itself, yeah, it doesn't necessarily route it directly to DotSwap. It actually gives you options as to best price. So sometimes that means getting a fill on Magic Eden. Sometimes it means getting a fill on, I
Yeah,
guess.
that's going
Ryan's
to be the
text
most
just got loaded
realistic.
up there today too. Yeah,
Yeah,
aggregators are going
speed.
to be
Yeah,
important.
let's go. Yeah, speed. You're a big advocate for fuck it, let's go centralized solutions or pseudo centralized solutions. Let's get a better user experience going. And I think we're all getting a little frustrated. I know Dylan here is from Bitflow. They're cooking something up that routes everything from stacks, which actually is a very interesting solution because then you have the LP side of things in a much more decentralized, protected way. Obviously, the only thing that you risk there is having the wrapper of the asset using, I believe they use Pontus Bridge for the underlying assets itself, and this kind of multi-sig solution for routing orders. So I think generally speaking, like I do lean towards the direction of something more like a Bitflow and Saturn relative to something like a dot swap, which is very centralized, or even like a RuneSex. I appreciate that people are trying these things. But Speed Racer, what's your take on this? Because you've been really vocal on AMMs on Bitcoin, and I guess is it time that we just give this a shot?
I think it is. There's trust assumptions in everything we do in ordinals. We just don't believe there is. And Magic Eden being one of the biggest ones. And what's part of a collection and what isn't. And I just think we're at a point where we need to trust some of the people that have been building here a little bit. Again, I don't think it's a long-term solution. I am completely on board with what you just said there. I think as decentralized and trustless we can get, I think the better. And to be honest, Magic Eden and both DotSwap and DotSwap's version one, when that first launched for BRC20s, you did actually have to deposit your Bitcoin into this accessory wallet. It wasn't done directly through your wallet. And if people remember when bids came out for Magic Eden, that was also the case. If you wanted to place bids, you had to deposit your Bitcoin into this accessory wallet in order to interact. And they've basically moved beyond that now, both at the version 3 level for DotSwap and Magic Eden, where you're signing in your wallet. So there's very few people that ultimately need to take the trust assumptions. Most of the people in this space don't want to, don't understand it. Who cares? They just want to trade in degen runes. They can completely trustless through all of these mechanics. They can do it through Bitflow. They can do it through Magic Eden. They can do it through DotSwap and now RuneStex and eventually Saturn. But we're coming to a point where I think for liquidity providing purposes, we have no teams in runes. And so, what not when we have no one-sided LPs and we have to pair Bitcoin with the rune, the time to build an LP is actually right off launch, right? It's typically the cheapest to do that and get enough liquidity in there. So, say runes are ripping, and now all of a sudden we have all these LP providers, and everybody has no liquid Bitcoin. You can't get pairs unless if teams step in and ultimately provide that liquidity. And so for people to look at it now and say, okay, Pups is at this market cap, Dog's at that, Billy's at this market cap, it's a lot cheaper to be able to pair up a significant amount of the liquidity at the current market caps versus if we're at 150 sats, say, for a $1 billion cap, because you'd need 3 times as much Bitcoin to basically supply to that equal
100%
amount.
agree. I definitely agree with you. Obviously, there's two things, right? Like one, if you're providing liquidity this low, you get more upside and deeper liquidity on the way up. But you are taking like a sacrifice from impermanent loss as an example. But in most cases, people have to realize that, and if you like, I told you guys this before, like I've been playing around with the DAOs and there is no liquidity provided. Right? It's just this DAO pool party. And so you get this position where if everyone were to just provide 1% or even like 2% of all of their holdings, and maybe some whales do 5 or 10%, you get this really rich liquidity pool that then allows people to buy in and out over time in a successful way. And that gets you much more upside than you had before. So it's okay, look, if we all suffer 10, 20% impermanent loss, but we get an upside that's 100, 200% greater, it's like game theory, right? So if you master the game theory outcome here, if we all just did 2, 3, 4% of our holdings and our BTC, and provide the liquidity in ideally in a centralized location or centralized DEX, because that's going to get you the deepest liquidity, the most concentrated liquidity, and so forth. Then you have the most successful outcome for the token itself, and you have those trading volumes, and then centralized exchanges can see that people are actively engaging, and there's active demand for it. People can buy and sell pretty actively, and everyone wins. I think.
This is what I've said. And again, it's like if people want to provide more, they all can. But you can, if you can find, for these larger market caps, and there is a science kind of to how much liquidity to provide, because too much liquidity actually isn't good for price appreciation or depreciation for that value. And if you go look at a lot of the soul shitters, you can get some reference points. And a lot of people were posting saying it's not enough liquidity. But in reality, about 1% of the total market cap and liquidity is pretty good, because in how I was looking at that was you can go onto Magic Eden and say you do a 1 Bitcoin sweep on Magic Eden. What happens to the floor of that? And you could plug that same number in on say DotSwap and see what's the difference there. A couple weeks ago, you put 1 Bitcoin into DotSwap and it says that you're buying it at 1,000 sats. And you'd go to maybe 100 on Magic Eden from 50. And now they're basically pretty close with where they're at as far as if you make a big buy or a big sell, what would happen to that floor naturally. So as a result, you don't need very much liquidity. So you can basically go say, hey, I'm going to go find 100 people in my community that each provide zero point zero 0.01 Bitcoin. Pair it with an equal amount of Rune, and now you've basically got yourself 2 Bitcoin of liquidity into whatever. And most of these runes being so small, they need 50,000 bucks, half a Bitcoin of total liquidity to have the optionality for trading. But keep in mind, the part of the reason why the bigger ones have taken off fastest, at this point the market still associates Magic Eden with the kind of oracle price. And if you generate a liquidity pool and nobody's buying on the Oracle website, they're just going to use a liquidity pool to dump. And so that's the biggest risk of those smaller runes. And so for the larger ones, people see that arbitrage and buy it up, or they delist and move things back and forth because there's plenty of trading volume in those top 3 or 4 runes. But in a lot of the small ones, it's way riskier right now to go and supply liquidity, because you could still have a half dozen individuals saying, I just want out and I can't, no one's buying it on Magic Eden. You get a big dump, you get the tokens, but are the tokens worth anything at that point? That's the
So,
question.
so speed. If you look at Pump Fund, for example, right? Like when a token is at 50K market cap, it's 20% of the liquidity, right? Like it's. I agree with you. Like 1 or 2% is probably the right number over, let's call it 100 mil market cap. But the lower you are, you want a deeper liquidity pool so that things can shake themselves out very organically, and the market just readjusts for that, right? A lot of people don't realize it, but these pump fund tokens at launch, I think there's something like 20% of the liquidity is seeded. And organically over time, it ends up having something like 1 to 3.5% of the liquidity pool. Just sheer organic behavior as to how much volume there is in inflows and how much it accumulates in fees to build the liquidity pool far greater. Obviously, the ones that have higher trading volumes after a while, basically these things get pretty damn bloated. But it also means that larger whales can enter and buy up 1 or 2% of the supply, and that's part of a healthy market. If someone can't buy 1% of your token supply, then I think, without slipping the book drastically, then you're never really going to get, I would say, long-term believers. Would love to get like Dylan's take. So Dylan, can you give us an update, like how things are going? I know you came here about 2 months ago when you guys mentioned that you guys were building liquidity pools for Bitcoin tokens directly on stacks, but the settlement is actually going to happen on Bitcoin through somewhat of a multi-sig, let's just call it execution bridge. So is that all live right now? Do you want to just share any updates, like where things are and so forth?
Yeah, I'm happy to talk about that stuff, but mostly I wanted to join and talk to you guys just about the AMM experiences. But yeah, I think you guys nailed it. You're spot on about what we gain from not having bricked floors. You also give up because someone can just come along and dump the token, and it's like a bigger risk for the smaller caps. But it also creates this opportunity where someone can come in
But
and buy it for sale.
it just means like these smaller cap tokens, like they basically should be at zero. I think that's if there's a willing seller into a liquidity pool.
You don't
that
like
exists,
Pepe with honkers? Come on.
Yeah. So some of these tokens shouldn't be trading at basically 100K, 200K, 300K, 400K
Sure.
market caps.
Sure.
They're just there because there's no one basically dropping the floor down. But there's just no more buyers. Like quite literally, if there was a liquidity pool, these things would be basically at zero.
Yeah, there's
I
probably
think
20
what's
runes, 20
interesting.
runes that would survive at this point, maybe 10 to 20. That's about it.
I think something interesting you could do there for those is like pair them with another runes token. Like if you build up deep liquidity with BTC and Dog, maybe you can pair something else with Dog. And you just have people that are wanting to hold. They definitely hold Bitcoin, but they also have some Dog and some of the smaller cap stuff, and they want to enable trading through it, or it's good for their community if they have some percentage of a pre-mine or something. So.
So I've been in discussions with Dylan and they're building a good product. There's just some friction points anytime you're involving a bridge. And I think they're working it out. I think they've got some good things that they're continuing to move forward. And to be honest, it's a good time to be building. It's not at high peak time. And so I think the kinks can get worked out. And then I think the biggest thing that we've talked about as well is the aggregator function. And right now, Xverse is serving as such. And I think as long as they continue to take the lead, we basically, as a user, it's going to be very nice because we're going to have fractured trading between multiple different dApps. And as a user, you can just click in there and say, what's the cheapest way for me to buy $100, or what's the cheapest way for me to buy $1,000 or $10,000? And you can just go and do it. And you don't need to worry about where it's coming from. And again, these are still trustless in a sense.
The challenge with that is like on Bitcoin, you don't necessarily have smart contracts to start routing it through multi hops basically, or like multiple liquidity pools. And so I don't know if we can actually do this as it currently exists. Maybe down the line, everyone's building on a similar smart contract execution platform. Everyone chooses to build on Arch. I suspect you could probably route orders in that way. Maybe. I don't know the right answer for that, but I think it's maybe. But Jeremy, I know you just joined BSV Association, Liquidity Catalyst, co-founder and CEO of DotSwap. Yeah, would love to get your take on this. You guys are building something quite interesting. And it wasn't until the liquidity profiles of these runes started to become much more significant that the actual, I would say, volumes just suddenly picked up over the last 2 or 3 weeks. And in some days, I believe you actually flipped Magic Eden trading volumes directly on their platform, if I'm not mistaken.
Yes. Hi, GM. Yeah, this is Jeremy, and nice to be here. Yeah, I just pick up the topic that we are talking about how to integrate all those marketplaces and different AMMs. We are very happy to see, okay, Xverse recently integrate Rune Stacks, right? And now I'm thinking about further trustless integration of different AMM. AMM is just a market maker, right? So you trade directly to one market maker, or we can simultaneously in one transaction trade with different market makers. We are developing that kind of protocol, and hopefully it will be opened up and it will be like completely trustless between the market maker side and the user side. So from the user perspective, they can choose whatever UTXO they want to trade from different market makers and different marketplaces, right, to find the best match, the lowest price for their purchase. Okay, so it can be done currently on Bitcoin layer 1. We just follow the philosophy of Bitcoin. Know your keys, know your Bitcoin, right? Self-custodian with liquidity integration. And it is what we call is the intent-based trading engine. So that's what we are building right now. And we are eager to open arms to all the liquidity providers, all those like market makers, professional market makers, especially we were building our API following Binance API rule. So it will be very easy to be integrated if you are doing market making on centralized exchange. But, and as Farmer Joe said, before our V3 version, there will be a V1, but V3 is a massive hit. Then I would say DEX is the future. We can actually on Bitcoin challenge the current big players of SEX. This is quite possible right now.
Jeremy, I would love to know like what the difference is from V1 and V3 and what happened with V2.
Yeah. Actually, V2 is the first decentralized version. Okay, V1 is a deposit and the trading on the bonding curve, and we replace the deposit with PSBTs, so you can just trade using PSBTs one click. So that is V2, and then we upgrade our centralized pool to multi-sig pool. We call it multi-layer multi-sig. So it is a multi-sig with MPC, and we collaborate with Safe Heron, no, not so well-known MPC provider in the background that upgrade our V2 version to a V3 version, which is trustless swap with MPC-enabled multi-layer multi-sig.
Got it. So right now the liquidity pools, like if I were to like deposit and add liquidity on DotSwap V3, this is going into an MPC or like I guess multi-sig. Is that right? And then whenever someone makes a trade against that liquidity pool, I guess on mempool.space, it actually does show up as a multi-sig confirmation.
The majority of the liquidity pool will be saved in multi-sig, but we got the hot wallet, which is also centralized exchange that is for daily casual trading, because the fees, right, just using single private key is much easier. Then we are trying to make it like more MPC enabled, just to use Safe Heron and use their MPC structure without a multi-sig. It is another approach, but that is not urgent right now, not high priority. Right now, the highest priority here is to build a fully decentralized self-custodian intent-based swap.
And I've been providing liquidity there. It is pretty slick. I did use V1 when it was first out, and like I mentioned before, I had to have deposits and then you have to withdraw. And now with the current stuff on the V3, basically you can provide liquidity. It auto matches the Bitcoin to the rune, and then it clears 2 blocks, and then you're in the liquidity pool, and it gives you your percentage. And then the rewards are paid in whatever asset is basically, if someone buys a rune, you get Bitcoin in that percentage base, and if they sell a rune, you get the rune in a percentage base, and that gets deposited into the V1, which he was mentioning. So that can be swapped instantaneously. But then once you want to withdraw those withdrawals, you have to pull them out, and that it has to go through the block just like you would deposit them originally. So it's pretty, from a liquidity provider perspective, it also feels pretty smooth. I think there's a couple things I think from an interface that could maybe be improved upon just from finding things and different things. But that stuff isn't as important for most people when in reality all they want to do is buy and sell these runes.
Yeah, I think Dylan, before you go, I think right now like just having something working at an elementary level is a win in itself. I don't necessarily see us needing to overcomplicate the liquidity providing piece, like concentrated liquidity pools, custom fee rates for LPs. Let's just get the basics down. I think if we solve like the trading problem, I think we'll be in a better position. But Dylan, I'd love to hear your take too.
Yeah, I think it's important. I don't know. I think that I don't like that. I guess it feels like we have to. I just see it all over the timeline. People asking for, "Hey, when are you going to list? When are you going to list? When are you going to list?" I think it's important for us to be able to build up these trading products around where you're doing the activity on chain. But yeah, I also am just curious more about like the security models around this as well. When the I think we try to be pretty transparent ourselves with like the trust assumptions that you're making, and I appreciate you coming on and sharing some of that as well. And I've used DotSwap and had a great experience. I used RuneStacks yesterday as well, and that I think I swapped BTC for dog, and I got the dog tokens in the same block, I believe, as when my Bitcoin confirmation was confirmed. And I think it's just, I don't know, maybe all of us can do a little bit better posting maybe better docs or something just to make sure it's really clear for the trust assumptions that we have underlying these pools. But I also think users at the end of the day don't care. They just want like a Google Maps experience, take me from token A to token B and just show me the best route. And even if we don't have multi-hops on layer one right away, Xverse is, if you were going to tell anyone to go buy runes right now, you would send them to Xverse because they take a look at all the different platforms and they just show you the best rate. And they're not like trying to split it up across different paths. And that's like maybe a different, splitting up the amounts over different dexes to optimize that is maybe like the next step. But yeah, I think, yeah, that's my take here is that we should, and I agree with what you said earlier too. Like we got to just like if people just put 1%, sure there would be like some impermanent loss risk, but it would just be massive for the runes community to have this trading on chain, and it would create a lot more opportunities for people to turn BTC into more BTC or
And
more
to be
DOG
honest,
into
it
more
would
DOG.
show the centralized exchanges that there's a demand. Because right now it's tough to do that when the floors are such dominated by the sellers, and so the whales and the buyers are not going to go into those marketplaces and interact. But I think we're talking very technical about a lot of this stuff, and I'm getting messages from a lot of people thinking that they need to completely understand AMMs before they can even swap. And I think it's just people don't know this stuff. They don't understand when you go and buy a stock on your brokerage account that this stuff is all happening in the background, and you send something and they give you something back. And that's basically what we're doing with this. But for most people, you don't need to understand it. I think the biggest thing that people need to understand is that initial swap trustless or not, meaning are you giving up your Bitcoin and trusting someone to send you something back, or is it all just on layer one Bitcoin? And pretty much all of them, to my knowledge, are at that point. So for most people that are actually just wanting to buy and sell, you can go right ahead. You don't need to understand what's happening behind the scenes, but important to watch how much are you paying for it, because in a low liquidity environment, both on the buy and sell side, the spread is going to be wide. And if you put in too big of a buy into a very small liquidity pool, you're going to pay a lot more. And the same thing if you try to sell a lot into a small liquidity pool, you're going to get a lot less.
Yeah, no, speed, 100% agree. I think it's definitely like a bit of an educational shift, or at least a lift to educate those. I think most people on Bitcoin have come for NFTs on Bitcoin or ordinals on Bitcoin. So they're not really like DeFi natives to begin with. We've seen this with even like dApps that have launched with points farming metas around them, and Liquidium was obviously a big one, but you didn't really see a drive of like native DeFi users to be points farming. You haven't really seen that play out on other applications and so forth. So I think just at a baseline level, the users are far below the maybe level of education, or at least tactics and strategies to know exactly like what to do to maximize their outcomes on chain than any particular chain out there. You could say the same for Solana too. There's not a lot of like points farmers, points metas, points this, TVL this, TVL that. It's really like a very EVM, ETH native concept. And maybe it's just because there's a huge amount of liquidity providers and capital providers, and a huge amount of like aged wealth that is just seeking yield of various nature. Whereas Solana has so many opportunities that you're not necessarily chasing a 20%, you know, return on top of your soul. You can very much do random shit and make more than 20%. And yeah, so I think Bitcoin is even like beneath that, where let's forget about like points farming metas. Let's just get down to the basics so that people understand what these AMMs really are and maybe how they work. And I think part of it is maybe, I would say, this implied risk where people don't really see what the bonding curve is. It's not necessarily on chain. It is at the end of the day off chain. And so people are like a little bit nervous, and especially when you're dealing with tens of thousands or hundreds of thousands. I really doubt that some of these teams have an insurance fund, let's call it, of 10, 20, 30 plus BTC just sitting idle to return everyone's BTC on a rainy day, let's say, should something happen. Of course, there aren't necessarily the same attack vectors at play, because if I just ended up rugging a platform for 10 BTC worth of runes, okay, great. Like, where am I going to really sell it? There's no other avenues really to sell it. So I would say for like a black hat or even like a white hat, there just really isn't like a huge financial incentives to act maliciously at this point in time. That might change down the line, and I think we just have to be mindful of there's probably going to be someone that tries to act maliciously, but it's all about making the right decisions fundamentally to ensure if and when that happens that it's not necessarily an attack vector that blows this whole ecosystem apart. Jeremy, I know you had your hand up.
Yeah, I would just say forget about retail user for LP. So basically, on other DeFi platform, right, the majority LP is from professional market makers. They add in liquidity, withdraw liquidity, and integrate with different fee rate and etc. We are creating tools just for, I think, for professional liquidity providers and professional market makers. I think that is what I need. But the user side, we need to guard their position, their assets, so make it totally trustless for the retail user.
But I mean, as a counter argument to this, though, like there's no such thing as like a professional market maker. At least when you're dealing with very low cap runes or low cap meme coins. On Pump Fund, the liquidity pool is just seeded on day one, so it's there, it's locked, it's not going away. But for every other token in existence, it's either a centralized team that provides the liquidity, or it's the community itself that builds the liquidity profile for the tokens as they see the larger benefit of doing so. I'd like to disagree because I don't think we have like extremely professional actors providing liquidity. I don't think a lot of the liquidity is coming from funds. It's just degens being degens and they want to be supportive and so forth.
If they exist, I would love to chat.
No, I think that's the pitfall of free and fair when we come about these early runes. And that may not be the way in the future because you may have teams that launch runes and have a basically pre-mines are going to come back. I think they have to for some of these new runes because you're going to need some liquidity to be able to put into these protocols right off the jump. But I think there's some that have just taken hold, and I think if we can spread the risk as an ecosystem, understanding those risks, obviously that you could lose everything that you put into these liquidity pools. Ideally, if we continue to move towards more secure methods, that becomes less and less of a risk. But as Farmer is saying, if runes do in fact take off, you think about some of the largest hacks that have occurred in previous cycles. It's been involving bridges and typically these liquidity pools and all that. So I think it's important to think about it now when no one knows about us. So then when they do know about us, everybody that's involved and transacting through these metrics will be safe.
Yeah, so I just wanted to jump on here because just piggybacking on what Lynn and Speed Racer said actually, because that's essentially the whole bet behind Arch is that we can make as much of a trust minimized, decentralized trust assumptions and really trustless experience for the traders who, like we've said here, retail mostly just wants to buy or swap, right? And if you believe that the vast majority of people who are actually staking in and providing liquidity are professional traders who, not traders, professionally liquidity providers who know and understand the risk and the trust assumptions and bake that into their profit margins and bake that into their calculations. That's essentially why we felt our mechanism is the best way to actually get what people want for retail, while also understanding that, yeah, there are going to be some trust assumptions for providing liquidity, but the major players who are doing that are okay with those assumptions. And in addition to that, we talked earlier, I think it was Speed Racer who pointed this out, or maybe it was actually Dylan, about how the issue is that without any price discovery, without any ability to do smart contracts on the Bitcoin layer, you can't actually tap into all these different liquidity sources. Now I remember it was Farmer who said this. And that's exactly the point, is that you have to have some sort of connective tissue, so to speak, that all these projects are building their liquidity pools on in order for them to tap into each other and have more efficient prices and things like that. So I think what's really interesting about this conversation is that you're going to have, hopefully, obviously we've got to do our part on Arch, but you're going to have those opportunities, and the trust assumptions really aren't going to be, it's going to be trustless for the vast majority of retail. And it's just understanding that the major players who are actually providing liquidity, are institutional, and know what risks they're taking, and would be willing to do it if they had, as Speed Racer was saying, a way that was more secure, aka a way that doesn't require bridging. And every other major ecosystem that we've seen, starting with Ethereum, has been the bridging that's really been that major risk. So it's interesting seeing all this play out in real time as we're building this ecosystem all together throughout these various products.
Does
Yeah,
anybody know, Farmer, do you know about some of the trust assumptions for LPing on runes decks? Because I've messaged them and I haven't, there's not any good documentation about that on their site. So just interested if anybody knows, or if there's anybody in the audience that's associated with them. Just love to hear,
Yeah,
you know,
I can
where that
explain.
is.
Yeah, it's a 202 multi-sig. It's one of the other examples where they're plugging in a more centralized solution for now, and then the plan is to eventually use an Arch multi-sig when we are, fully battle tested, audited, and launched on mainnet. So I think you have a couple different camps of builders here right now. You have ones who are saying centralize in the short term is okay, as long as the eventual plan is to decentralize and make it more secure over time for liquidity providers. You have more like Bitflow camp, where you're using the smart contract and programmable functions that are available today on stacks and utilizing whatever's available, like Pontus Bridge or SBTC Bridge, et cetera. And then you have other builders like Saturn who are saying, you know what, we're going all in on Arch and we don't care about launching a short-term centralized product. We're going to skate where the puck is going and be the fastest iterators on this network. Ultimately, the end goal is to be sufficiently decentralized, sufficiently secure for the entire network, and of course, composable. So we could build this like these money Legos that you see in other ecosystems, and you can do cross-program composability from smart contract to smart contract, and you can call smart contracts inside of other ones. I think the major issue right now in Bitcoin is every single app is completely siloed from each other, right? If you want to do an Aave style dynamic, try going to the Aave front end or try interacting with a DeFi application that integrates Aave. It's completely different. So right now, the only thing that's available is to do an Aave type of thing is you can either bridge to stacks and you can interact with Zest and borrow some USDH or whatever, or you can go to Liquidium and you can use the DLCs or the ICP pools that they're eventually going to do, and you can borrow some USDH from that. But nothing is actually integrated or composable with other things to do flash loans, to do perps and hedge strategies. And this is ultimately what we want for the Bitcoin ecosystem, to create this very fluid dynamic of liquidity so that there's actual catalysts for activity and volume. Liquidations really power a lot of the yield pools and vaults and stuff that you see on Hyperliquid. And by the way, Hyperliquid is doing the exact same model as we're talking about before, like more centralized to start. Eventually, the plan is to decentralize over time. But it's just a different strokes for different folks. But hopefully, at the end of the day, we all reach the same conclusion, which is less fragmented liquidity, less fragmented state, and more composable DeFi for all Bitcoin users.
Yeah, 100% agree, Matt. I want to just get Jean Paul to jump up here. I know he had his hand up for a little bit, and then I have a question for Dylan, and Robert's gonna like it because it's about Solana.
Yeah, thanks for having me up here. First off, I'm really excited about the expansion programmability on Bitcoin. It feels exciting, like how I felt in 2018 with Ethereum. So excited to see where it goes from here. But there's a lot of competing protocols, things that are more centralized versus more decentralized. And then with Arc Network, Matt, maybe you have information on this, but I'm learning about like alkanes and now Arc Network, and I'm just trying to figure out what is the main difference here. Because if at the end of the day it makes it so you can build out smart contracts directly on the L1 side, how do you choose between these competing protocols?
So I would say that generally speaking, the majority of all of these implementations, we'll call them like the meta protocols camp, although Arch isn't strictly a meta protocol, since we're an entire blockchain with its own VM, its own state, its own consensus, et cetera. But we're intertwined with Bitcoin. I'll get into that in a minute. But this whole meta protocol category, you can think of it as a way that Bitcoin cannot do these more complicated smart contract things or Turing complete things. You need more necessary architecture in order to do these things that are more comparable to smart contracts on Ethereum and Solana. So Bitcoin can't do it on its own. So this implementation that all these different things, you mentioned Alkane, so that's the oil, and they used to be called proto runes, but oil in their indexer, wallet and indexer, That's one example. OpNet's another example, and Glitter, I believe, is another example. But essentially, all of these meta protocols take some type of programmable system that's not on Bitcoin. We'll do an off-chain computation, and then the devil's in the details on how exactly we get that data back to Bitcoin. Because essentially, in order to go play around in that sandbox or that universe, you have to wrap your assets. You have to basically bridge into their network to get this more newfound programmability that doesn't exist on Bitcoin specifically. So that's generally speaking how all of these implementations work. Arch to a certain degree works similar, except instead of using WASM or EVM, something pre-existing or built, we built our own VM that actually was specifically designed for Bitcoin programmability. So we can be more intertwined with it. We can be anchored to the state that was happening on Bitcoin as well as what's happening in the mempool. And we can actually we can construct Bitcoin transactions as a result of those state changes that happen both on Bitcoin and on Arch. So they're like seamlessly intertwined in a way, which has some certain advantages with regards to reorg resistance as well as some performance related things, which you can probably see on Saturn how it's much more performant, but also at the same time native. I hope that answers your question.
Hey, Matt,
Yeah,
question on
super
that
quick.
I'm
extension.
gonna.
Just one quick question.
Oh wait.
Is would OpCat be competitive or complementary to what you guys are doing?
I would say it's complementary in the sense that it's only going to allow for users to peg assets into more programmable off-chain opportunities in a more trustless manner, where you don't necessarily need to rely on bridges or things of that nature. You can do more trustless vaults and then still use the Arch VM to manage more of this more complicated state transitions, because it's not like OpCat is going to suddenly make Bitcoin much more efficient and programmable in the sense that we're going to have AMMs directly using OpCat. You still have long blocks on Bitcoin, and OpCat's not going to change that. So it's going to enhance a lot of what these meta protocol type of projects are doing, and as well as layer twos currently relying on BitVM, which is a much more optimistic type of setup, where OpCat will be a totally trustless operation that you can trust Bitcoin for.
I want to add one thing
go
here,
ahead, Nick.
just real quickly, just because there was that question about how do you pick between them, and I think Matt was doing a great job of explaining the technical differences and the basis that a meta protocol is just everything's just trying to add programmability to Bitcoin. That's what L2s are doing too, right? And right now we're talking a lot about the security assumptions, and that's going to be a major part of it. But what's going to actually cause people to make different decisions is going to be on user experience, and frankly, it's going to be on speed. And so that's the big difference, is that you have these other projects, and yeah, they can add some layers of programmability. Yeah, some of these meta protocols even require bridging too, just like an L2. So it's like less performant programmability than an L2 like Stacks, but while still having a bridge, but like theoretically it's a meta protocol, okay. But the real value, I think, is going to be in the speed and the user experience and what that unlocks. And so we go back to, okay, why does it matter what Matt said about Arch being custom built for Bitcoin as opposed to something that's shipping off to the EVM or something like that? Because we were custom built, we were able to create a UTXO based system that is able to take actual Bitcoin assets, whether it's Bitcoin itself or runes or ordinals and things like that, Bitcoin native assets. So in a way that maintains the awareness happening on Bitcoin so that we can speed up transactions within the Arch network, right? So that's those faster transactions. And in the end, and for the user, they're just able to move quickly. And then, of course, there may be rollbacks and things like that. And that's something that's very common on network or anything like that. But because we are able to be anchored to Bitcoin and be projects have added enhanced programmability can really say, that is what is allowing us to be able to both move faster than Bitcoin's traditional times, while also being able to actually offer a bridgeless experience. Right? Stacks can say that they have a fast experience and can also end on Bitcoin. They can't say it's.
Yeah, 100%. We have a lot of options
experience.
already.
Yeah.
Oh, sorry, Nick, you're just breaking up there. Apologies. There's a lot of like different ways. If we're all just going to get comfortable with bridges, for example, we might as well just go to Solana, relatively speaking. Dylan, I guess I wanted to ask you. I guess I wanted to ask you though. You've built this system, or at least this like the infrastructure that enables purchases on Bitcoin and then settlement on stacks. But hypothetically speaking, is this all just possible to occur on Solana in the same way, shape, or form that you guys are integrating it with stacks? Let's just say there was a contract address for Sol wrapped assets like Pups on Sol. Could you, in theory, execute using, I believe, the multi-sig approach in between and then bridge it back to BTC in a seamless way? Should that be possible? I
Yeah.
guess it requires one having the bridge operator and a bespoke, let's just call it committed 20 token on the other side, right? I guess that's your process requires you to almost own the bridge or at least have a really good partnership with the bridge operator and have a DEX on the other side like you guys do.
Yeah, you can copy the exact same infrastructure that we built and you can deploy it on Solana. You could have we have a federation of 15 different signers at Pontus that are great companies that care about Bitcoin and Bitcoin assets. You can do all that. I think we talked about this a little bit already, but like just on Twitter talking back and forth. But yes, the smart contract functionality is you can do the same stuff, but I think a big difference there is when you're bridging the asset. The mint on the stack side depends on the Bitcoin transaction being confirmed, right? Like at the consensus layer. And Solana doesn't have that. And
So the long story short is the bridging to Sol, or sorry, the long story short is bridging to stacks is much more secure than bridging and minting an asset on Solana. Is the kind of
yeah, not just secure, but faster, right? If you're bridging to another chain, you have to wait for a probabilistic based security of what depends on how long you really want to wait there. It could be 3 to 6 blocks, or I think is like somewhere around like it ranges there. But as soon as the Bitcoin block is, or as soon as like your Bitcoin transaction is confirmed in one Bitcoin block, then that asset can be minted in immediately on the Stacks chain, right? In a single Stacks block. And yeah, I don't know if you guys or if anybody in the audience was using Stacks before the Nakamoto upgrade, but it was pretty rough. It was like one Stacks block with every one Bitcoin block. And I had friends that I tried to onboard to it, and they were like, "This is cool, but like this sucks," because
oh man,
it was just so slow. And
the
like
nonce issues, yeah, like as soon as you had hundreds or even thousands of transactions in a block, none of them seem to have gone through. That was it was brutal.
So yeah, definitely some growing pains there too. But it was just so slow before. So the Nakamoto, I think it's great, and because it speeds, it separates, it decouples basically the Stacks blocks from Bitcoin blocks, but it still benefits from Bitcoin security as well. If there's just to bring it back to your original question, like if you bridged Dog over to Stacks, right? That mint is dependent on the L1 transaction being confirmed. If it was reorged and no longer in the longest chain tip, it would no longer be like a valid mineable transaction on the stack side as well. The stacks would fork with Bitcoin in that case. So you don't have to wait like you would have to wait with Solana, right? So you can perform this trade BTC for Dog, and have it locked in one Bitcoin block.
But
If you're receiving the asset on the L2 side, if you want to do
I do think there are some teams that are trying to solve the issue of what you're saying of one having to wait multiple blocks to confirm the chain state and so forth. Like Zeus, I believe, is one of the teams that is trying to bring at least mempool and Bitcoin transaction level information directly to man, I don't know exactly what it is, but directly to the validators, like the Solana validators. Yeah,
Yeah, that's
Solana.
very interesting.
Yeah.
And I want Bitcoin assets on Solana, and I want them to do very well there. I think that there's an advantage we can have we talked a lot about how it's like about providing a good UX. And I think we're also trying to focus on and be very transparent about the trade-offs that you make, like with decentralization and using like a 15, like a multi-sig of 15 wallets, like 8 out of 15 for bridging. It's people that care about these Bitcoin assets. And I think we have an opportunity to provide the best UX for trading these assets where even if you're and something that scales as well, like at some point maybe the fees are prohibitive on L1. I think we have to build enough cool shit there first for us to get to that point. But yeah, then where are you at like when Bitcoin needs to scale in layers? Do we want to send everything to Solana, or can we I think I prefer Stacks as a solution that at the consensus layer only depends on Bitcoin. And these assets, you can trade them there if you want to move quickly, or you can do L1 to L2. You can do L2 to L1. You can do L1 to L1 round trip swaps if you're willing to wait a little bit longer. And just know that your trading experience, like the amount that you're actually getting, is locked in, and maybe you have to wait 1 or 2 blocks for it to be bridged out. But yeah, I think we're all building stuff a little bit differently, and I'm sure some like assets on Solana will do well. And but I also really like our design, and I think we've got a good shot for the best UX for trading. But right now, I still think the best. If I was going to send a friend anywhere to go buy runes, I would send them to Xverse right now, just because. And I'm saying this as someone who's built an aggregator on Stacks. We built the best place to trade on Stacks, and like Xverse has built the best place to trade runes right now, because they will show you all these different places, and they make it easy to do inside of the wallet.
Will the Pontus bridge work for Arch as well once Arch mainnet goes live? Like, what are your thoughts there? Is Bitflow aiming to be an L1 product? Should Arch enable you to build a good user experience on the L1, fundamentally speaking?
Yeah, so Bitflow is just one of the signers for Pontus, but I will say that we are building on Arch as well, and talking with Matt all the time, it comes back to, I don't think people will care so much about what route is happening under the hood. They just want to know, get me from asset A to asset Z, and sometimes the most efficient rate will be on Arch, and sometimes it'll be through like Pontus and Stacks infra. And maybe even it could be through Solana infra as well. And yeah, the people that are building out the best aggregators and providing the best UX, solving this fragmented liquidity problem, I think it's gonna exist in different places. It's not all gonna be on Arch. It's not all gonna be on Stacks. It's not all gonna be on Solana.
Yeah, no,
Yeah,
agree. This is a major issue on ETH. If you're trying to buy a token on ETH, there's dozens of ETH L2s, and there isn't necessarily usually a single DEX that routes through every single ETH L2 and liquidity pool to get you the best fill. I think this is genuinely still an issue that ETH struggles with is liquidity fragmentation.
Yeah, they're stuck in the middle, because like the one of the Solana founders was on some podcast, whatever, the other day, and said he was just bashing the ETH devs and saying, "You'll never hear me say that L1 is not for users," but like apparently one of the, I don't know, like someone said that, and so like Bitcoin is similar. Like it's gonna have to scale in layers, but Bitcoin is. I think we're all here because we prefer Bitcoin as like the best form of money, and we want to build a strong DeFi like on-chain services and tools like around it. But yeah, Solana has it's just two different ends of the barbell, right? Like, and Ethereum's in the middle there, where you've got this modular design that isn't going to be able to catch up with Solana.
You're
And
starting to see it be more and more common, like the liquidity itself on any kind of ETH, really, like ERC20 token. It seems like most of the liquidity tends to sit on the L1 itself, and I don't necessarily think that's a bad thing, primarily because why should you have it sit on 10 different ETH L2s and have a very thin order book on each and every one of those when you don't necessarily have a solution that routes through every single L2 and just fills the order on my desired chain. I think some of this tech is certainly coming, but it is almost like they created this problem unnecessarily by just having a modular solution relative to the more monolithic chain environment where all the liquidity sits on the L1 itself on Solana. Fundamentally, the architecture is just different. I think Bitcoin is genuinely more likely to scale in a modular way, primarily because it can't really work in a monolithic solution. So maybe we have a very performant EVM smart contract execution layer, or a very performant Rust-based VM like Arch is doing. I think we can skip the whole let's build 25 different layers and have 24 of them not necessarily be used, because we've learned from the best testnet out there, which was Ethereum. And hopefully this means that stacks can get much faster, and hopefully the adoption for Bitcoin L2s definitely increases. As it stands right now, the use case for Bitcoin L2s, I will say, is very limited. Outside of just EVM points farming, there's not a whole lot of genuine use cases for these L2s. That might change down the line. But John Paul?
Yeah, to jump in there, I'm curious to get your perspective on something like Starknet, which has come out of the gate and said we're going to have a Bitcoin L2, but it also settles the ETH. Going to Nick's point earlier, a lot of it is about UX and also about things to do. Right now, runes and ordinals are fun, but there's not a ton of activity, largely because slow and expensive to transact. So if you open it up to Bitcoiners to be able to enjoy, the world that they have faster and cheaper, but also get access to something like the entire Ethereum network through something like Starknet, is that something that you see as a potential winner within a cycle, or do you have any strong opinions on it?
I had a call with the Starknet team because they reached out and they wanted to get my perspective as a user of what my problems are. So I will say, from an engineering perspective and a research perspective, the Starknet team is exceptionally bright. And I think that they're approaching things in the right way of let's identify what the problems really are, and then let's work backwards to trying to solve these problems. And they're probably the most capable out there from a research engineering perspective to being contributors to some things like BitVM and BitVM2, Opcat, and anything that they can do with it. But I think at the end of the day, they're really trying to push adoption to Starknet as an L2 and have trust minimized approaches to bringing assets over from Bitcoin to Starknet. By the way, the Starknet team they're Bitcoin OGs at heart. The only reason why they built it is because there was so much smart contract programmability that they wanted to explore. But deep down inside, they care about Bitcoin, genuinely speaking. I think this is all net positive. It's just taking us maybe longer than we anticipated to try and solve some of these problems. But I do lean more strongly towards teams that are more close to the L1 and trying to bring more native L1 transactions at the base layer than trying to siphon off, let's just say, assets and users to some things like Starknet. Obviously, nothing against those teams. I think they're doing what they need to do from a business case perspective and to build out an ecosystem that's just a natural progression that you take. But I think I'm biased that transactions need to happen at the base layer, and let's try and figure out ways on how we can do that before we move people over to L2s. But Speed Racer or Dylan?
I think we mostly agree on this, but I think the maybe one point of difference is the stuff that you build on L2s can get you to transact on L1 more. That's all. When we were going back and forth a little bit the other day.
Yeah.
Of course, we got to build more stuff on the L1. That's great, right? And I know that you align with things that are that lean more L1. If there's SBTC emissions happening in our runes pools and people want to go claim that SBTC and bridge it back to L1, that's activity that benefits the L1.
Yeah, I agree.
And
I think I generally agree. And the direction that you're taking, Dylan, is it leans towards more transactions happening at the base layer. It gives us nice interoperability between stacks and the L1. And I think if we can abstract these L2s and saying, hey, if you want to be a buyer on the L1, if you just want to hold your assets on the L1, great. And if you want to sell them, fine. I'm not going to be trading these things very actively, but I can still sell using this Pontus bridge into the Stacks liquidity pool that was set up, and I'll have my order executed. Sure, it's not going to take 1 second or 3 seconds based on finality speeds. It's going to take 10 minutes. I'm already transacting on the L1. So I have finality of my assets on L1 where I feel much more secure in holding them, but I have transactability at the L2 level. And it's the best of both worlds in a way where not your keys, not your Bitcoin, but I'm always holding it on L1, so I feel the comfort in doing so. I understand the direction that you're taking. I'm not knocking it. I think it's very interesting that the approach that you're taking, and certainly there's a massive benefit to doing anything on a layer solution. The incentives alone can drive consumer behaviors or liquidity providers' behaviors. If you provide liquidity on the L1, in most cases, there isn't necessarily an L2 foundation or even incentive program of size and substance to help bootstrap this. Whereas Stacks has been around, it's a very valuable L2, 4 billion plus, or depending on the day, market cap FDV. Look, there's a lot of things that the Stacks Foundation can do to incentivize people to provide liquidity, and teams like yourselves are much more well capitalized than some of these experimenters, and it puts you in a spot where you can help bootstrap some of these initial activities relative to something that's like free and fair, like no token incentives, no incentives at all, and just we're at a standstill, and we're not really getting anywhere with progress from a user experience perspective. And yeah, if we're just going to be putting around for months on end, let's give this a shot. Let's see if this works. Let's see if it sticks. I think it's all trial and error at the end of the day, and we didn't get this far on Bitcoin over the last 2 years without a substantial amount of failures. Relatively speaking, Runes and BRC20 kind of failures in some ways, shape, or form, but we're getting past the hump. We care about this, and these things are still quite valuable with
And
billions of dollars of asset value.
to wrap off of that, and I got to take off here pretty quick too, but I appreciate this discussion in general. I think for the user, I think this is very bullish. I mean, a lot of stuff is technical, but ultimately everybody's trying to compete for a better user experience in trading assets that people want to trade. And the market's ultimately going to decide what the standard will be in the future. And there's competition for both liquidity as well as for flow and volumes from these teams' perspectives. And everybody's still bouncing things off each other and just trying to figure out what do users want, what do we need on the security side. And so I think we're moving this space forward quite a ways. I think it's on us as an ecosystem just to continue to ask questions and get more transparency from each and every one of these teams. So when people are deciding to take their hard earned money and Bitcoin and transact on their platform, that they feel comfortable in whatever risk assumptions they're making. And so I just appreciate where things have gone. And again, I'm not part of any team. I'm not getting tokens from any team for anything. I'm just a user that's just trying to use things and see what works and what doesn't and provide hopefully constructive feedback to everybody involved. And I think it's just important for us to say, hey, the order book is very important. I think an order book can be very beneficial to trading runes and fungibles, but it's probably not the best only source for trading. I think Magic Eden has still done a lot for this space, and we need to recognize that. And they're still grinding. They're going to put out great products. We know they will. They listen and they continue to adjust. But in general, I think this is bullish for the user, and it's just important. It's a good time for everybody just to start to do a little more reading about some of this stuff. Okay, this isn't the only place we can trade them. Where else can we interact? So I got to take off, but appreciate the discussion.
Yeah, no, appreciate the discourse speed. You're always welcome. Yeah, on the topic of like other things, I think we have a really bullish setup for a 2025 on Bitcoin. Bitcoin price probably goes higher. We have Czech Republic central bank that just announced that they're considering purchasing Bitcoin as a reserve asset. And so the reserve asset meta of countries and central banks is probably going to proceed in this direction. This is the first time that I think countries are genuinely taking Bitcoin as an asset very seriously. And I think that's likely to bode well for 2025. Beyond that, we have L1, smart contract programmability, experimentation. So I think Bitcoin is going to be the driving force of the 25 narrative per se. It genuinely doesn't feel that way. And I know some people are hurt, their bags are hurting, but I think the long-term believers should be rewarded over time. And if we just look at like where we're at in this cycle, I think it's going to be quite a long cycle relative to other people's expectations. I think just generally speaking, some people are just like, yeah, it's probably a bullish Q1 and then it's all over. But I think that's probably not going to happen. I think we have a very bullish next 12 to even 18 months, just based on Trump's US adoption as a strategic Bitcoin reserve. Obviously, we have the ETF inflows that can be very promising. You know, yeah, I think there's just a lot going on. And then centralized exchanges still have not integrated runes at large. I think we're all taking a very like cautious approach to supporting this, and centralized exchanges are genuinely looking at the volumes on the L1. They see interest, they see appetite, they see these assets start to grow in value, but oftentimes there's got to be a business case. Kraken was one that said that it's on their roadmap, but it certainly isn't necessarily an immediate item. But I think over the next 3 to 4 months, we'll start to see some of these centralized exchanges be first movers in adopting this from a technical perspective. We'll start to see more countries consider adopting Bitcoin as a strategic reserve asset. We might even see some central banks actually implement this and do it. And so I think there's a lot of good narratives and good information flows that are going to come about over the next 4 months. It's a little bit painful to be sitting around. Robert and I actually talked about this. A lot of people are just playing around on base and Sol as time passes, and it does suck. but people will go where the masses are, and until the masses flow back to Bitcoin, which they usually do, it just takes a little bit of time. It might be a new ordinals mint that causes inbound interest, much like Fuku's did. Fuku, I think it's Fuku, did over the last month or so. Maybe we see more ETH NFTs start to do ordinals launches, or maybe it's like an inflection point of having a really good trading experience. Certainly there's teams that are focused on a mempool first approach and doing buys and sells within a block. And so in that case, we don't necessarily have to wait 10 minutes for things to settle. We could be maybe buying and selling ordinals within the same 10 minutes and having profits flow back into your wallets. That could be like a very interesting exercise. So I think there's just a lot of things that we haven't really pushed the envelope on, and I'm excited to see that occur over the next 6 months. I'm always in the same position. Like the next 6 months are going to be more bullish, and we just constantly grow on what we can actually do or what we try and experiment on. Yeah. Robert, any thoughts to when we might see something like that happen? I know Satflow is very like mempool first, mempool aware. Satflow is, I guess, leaning in the direction of being the floor for every single Bitcoin asset, but wanted to hear your take on when exactly we can maybe see some of this in mempool trading start to occur. I know Saturn has started to do that on testnet. Is that even possible with ordinals, or is Magic Eden going to maybe start to do something like that?
Yeah, it's, by the way, great conversation today. Enjoyed hearing everyone's take around the AMM front for runes. As far as the in-mempool trading is concerned, it's all actually quite possible from a tech standpoint, as I think most of us on stage here know. But the challenge is really dealing with the ever-changing state of the mempool. Buyers and even sellers are constantly canceling transactions and causing a ruckus, and there's just a lot of UX considerations in showing to the user like, hey, you're buying an ordinal that has already been purchased once or twice or even more times, right? And making that a good user experience and making it all flow nicely together, making the transaction generation be quick. But I'm pretty optimistic that we will eventually get to a point where in the very near future, like the next few months, you'll be able to buy something, have it show up in your wallet as unconfirmed with a flag, and be able to relist it instantaneously, especially now that we have secure purchase across some of the major marketplaces like Magic Eden, Satflow, etc. Like this kind of stuff is more possible now. And it sounds like generally what Saturn is working on as well. So I'm excited for it. I think it's still going to be janky, as is the case with a lot of stuff that happens on Bitcoin, but at least you'll be able to touch your assets more often and faster, right? You'll be able to interact with the assets while they're in the mempool and bring just a more fast kind of feeling experience to the whole trading experience for Bitcoin native assets.
Yeah, look, at the end of the day, when we started to trade these things openly with PSBTs, I think most people were aware that mempool sniping can be a thing, or even order cancellations can be a thing. And it didn't really stop us from, I guess, getting this far to this day, right? And obviously, from a game theoretic perspective, how common is an order cancellation going to occur? There's sometimes incentives to cancel. Are they large enough usually? Maybe, but are they going to be exceptionally common? I don't know. But does it provide like an additional lift of, I would say, usefulness to the end user from a user experience? I think the answer is yeah, drastically. Curious, like what your take is there. Ordinals themselves don't tend to be flipped within 10 minutes. That, at least more recently, certainly we saw much more trading activity within 10-minute block times when node monks were very popular, when these assets were trading upwards of 0.5 BTC. So maybe today's market dynamic isn't necessarily entirely suited for in mempool trading. I would say more high velocity assets like runes, like BRC20. BRC20 might be even more trickier because you need the transfer inscription, but things like meme coins with high volatility and high turnover would seem to benefit the most from something like this, right? Is that fair to say?
I think it's more interesting in the context of fungible tokens for sure. However, it applies to ordinals as well, or pretty much whatever is next. BRC20's transfer inscription limitation actually doesn't even need to be in place. You could theoretically, with BRC20, reap the same rewards in that, like, when you buy a BRC20, you can rapidly create a transfer inscription, list it for sale, all in the mempool, right? The mempool really is the center of the action, and it just requires block confirmation for it to be, securely your asset. But from a trading perspective, like, everyone, all of Bitcoin native assets can reap the rewards of a mempool first approach to trading, right? The caveat is, as you said, just around the MEV aspect and someone in the chain breaking the chain of transactions. But we feel if we show all of what's happening to the user, make it clear if they get broken, we're optimistic that the tech will eventually catch up to hopefully remove the prospect of MEV. And there are some ways you can do that, like in a post-op cat world, or I don't know, maybe it's Arch that helps plug this gap eventually so that you can just have 10 transactions and none of them can be intercepted. You could use theoretically a 1 of 2 multisig today to accomplish this as an intermediary address. So there are ways to solve it. And yeah, I'm optimistic. Like, there is innovation in the Bitcoin core layer on the mempool, removing the 25 transaction limit, for example. And there are pieces of tech, quote unquote, like Opcat and obviously Arch that maybe solve this problem as well. So I think we all just want more throughput, right? It's bringing more throughput equals more volume. And that's really what in mempool Bitcoin asset trading delivers, right? Right now, our volumes are not attractive for large institutions and market makers to come in because there's a lot of risk for not a lot of volume and upside for these liquidity providers. But if we can fix some of these things, increase the throughput, that's going to be good for the ecosystem.
So I'd love to know a little bit more about that. So right now you said that there is like a inherent limit on how many transactions can be chained together, right? Is it 20? You said?
Yeah, so Bitcoin Core will only accept, it's either 24 or 25 child transactions in the mempool. So theoretically, an ordinal can be transferred around 25 different times, like to different addresses, in buys, sells, or transfers, like 25 up to 25 times within a block. So you basically have, for one ordinal or one lot of runes, you could theoretically, within mempool trading, increase the throughput of trading velocity like 24, 25 times what it is now with a mempool first approach.
Got it. And I guess what do we need to do to remove this limitation and let's just say get it to the point where it's unlimited?
It's a good question. Good question for the Bitcoin Core devs, frankly. There are some open PRs, some open issues and discussions around just better mempool tech. I can't cite them off the top of my head, but the easiest one that I know for sure is being discussed is removing this 25 limit, because ultimately it does mean that applications that can support more transactions per block obviously results in more transactions being sent to miners, equals more mining fees, which is good for our Bitcoin security budget and so forth, right? So the incentives are aligned for innovation on Bitcoin's mempool, and pretty optimistic that things will happen. It just has to happen on the Bitcoin core level, which, as we all know, moves quite slow.
Yeah, love to see that. I think that's a really good takeaway, and I guess maybe it's not necessarily something that we can go to Bitcoin Core devs right now, as we don't necessarily have, or at least maybe we haven't hit the wall per se. But down the line, I'm certainly sure that we can we can go to them and see what their thoughts are. Dylan?
If I may,
Sure.
just one last thought. I will say ordinals and runes have been responsible for a lot of Bitcoin Core innovation to date, enforcing full RBF transaction acceptance, right? Basically allowing transactions to be replaced even if they have the RBF flag crossed out. This was a long battle, like a near decade-long battle, mainly championed by Pwrd, a prominent Bitcoin Core developer. And it was only until ordinals started being sniped for massive mining fees that Bitcoin Core recognized, hey, if we don't include this, is going to result in miners having to run sophisticated MEV strategies and so forth to actually get the most reward. So the best incentive alignment actually comes from ordinals and runes, pushing more fees to miners, right? everyone wants miners to get paid more. Like that's just a common, I guess, Bitcoin kind of ideology, right? And yeah, this is another example, I think, where ordinals and runes can lead by example. If there's clearly a demand for paying miners to accept more child transactions in a block, they'd be silly not to. They flip one switch in their Bitcoin Core configuration, and now they're earning more fees per block, right? So yeah, I think the incentives here are really important, and they are aligned with innovation.
Yeah, I think at the end of the day, we just have to show them that this is possible and people are demanding this. And then there's a business case and a revenue case for those miners. Dylan, your hand is up.
Yeah. Hey, just had a question for you, Robert. Curious, maybe just to hear your thoughts on maybe any blockers on getting more market makers for these types of assets. Is it tools for custodying them or using them and across different apps or whatnot?
Yeah, I mean, we touched on, it's a good question. We touched on one of them, which is upping the throughput. Like, how much volume can we actually push per block? I think aligns the incentives for them to bring more liquidity. Right now, if they supply an amount of dog or Bitcoin, it's only like the volumes are just so low that I think it's not very attractive for them. But frankly, we just need to see more adoption of the Rune and ordinals protocols amongst like different wallets, marketplaces, and like explorers, I think. So, which will come. These are very sticky protocols inherently. But yeah, it's just also tough to compete with the kind of fast-paced nature of Solana, which is very attractive from perspective. But frankly, I also think we need to see more true DeFi on Bitcoin, right? Like Runes is a fun experiment to like a taster of maybe what's to come, but we don't really have anything at all like on the DeFi side yet that like has scaled. So more DeFi experimentation, I think, will just bring more conviction from the market makers. But yeah, I'd love to get your take on this as well. You know, this is just my 2 cents, but yeah, what are your thoughts?
Yeah, my thoughts are that it's like pulling teeth trying to find market makers. But yeah, I'm not really sure what the blockers are. I'm still learning as well. But definitely, I mean, generally speaking, seeing token standards integrated into tools that maybe they're more familiar with, it would be a helpful first step.
Yeah, love it. On that note, it's about time for wrapping up the show. I think it was really nice to get most of the DEX builders out there, the marketplace builders, and see how everyone is really thinking and like what direction they're going. And obviously, every single implementation has its pros and cons, and each of them has its limitations, and maybe even opens up like new problems and challenges as a byproduct of it. But it's obviously good to hear and learn from each and one of you, like which direction is maybe the most likely, or at least the one that has the lowest amount of friction, highest amount of security assumptions as well, or at least enough that people feel comfortable and safe, both providing liquidity and trading on these things. So appreciate you guys all coming up here. It's been a really nice discourse. I didn't think that we were going to talk about DEXs for the better part of an hour and a half, but it was a great conversation to learn everything. One, having an approach to stacks, having an approach to the in-mempool stuff, and having an approach to more custodial NPC-based solutions out there. All things to say, still very optimistic in Bitcoin L1 user base growing and the fees on L1 swelling as a byproduct of that. But yeah, it should be really exciting to see where the next 2 or 3 months go for as far as the user experiences that newcomers are going to have. We're certainly giving them better options, maybe still not enough for them to continuously stay. And then down the line, I think it'll be interesting to see how we start to launch some of these tokens or new tokens as maybe fair launches become less common or launches become less fair. So yeah, appreciate it, guys. Tune in on Thursday. Yeah, we'll see how much we can dig deeper into DEXs, but maybe we focus on ordinals on the next one. But yeah, appreciate you guys coming up here. Take care, guys.